Hi, today I wanted to talk to you about solopreneur or solo proprietor as a business structure. Now, many businesses in the United States are created as sole proprietors, which means that one person owns the entire business. Now, these businesses can have employees. These businesses can hire IC contractors, independent contractors. But it really means that only one person owns the actual structure of the business. So when you own the business, you have 100% liability, you have 100% responsibility, and you get to make all the decisions that you would like to make because it's your business and you can do what you want to do with it. But there are a few other things that are a requirement. Even though this is the simplest form of creating a business, the requirements include picking a business name. So you need to pick a business name. If you're going to use your name, you don't have to do the second step, which is to file for a fictitious business name. Now, fictitious business name statement is usually filed with the county that you live in or your business is in, and it's telling the public that you are creating a business and this is what your business name is. So, for example, your business is Mary Smith, or your name is Mary Smith, and your business, you want to create it as Sunshine Counseling. Sunshine Counseling would need a DBA, but if you created your name as Mary Smith Counseling or Smith Family Counseling, you wouldn't need to get a DBA. So it depends on how you're going to classify your business and what the name is going to be. The next thing you need is a business license, a business permit, sometimes it's called. The city usually is the one who requests, or a township is the one who requests that, and you may need multiple ones if you're having multiple offices. The last thing you might need is a zoning permit. Depending on your municipality, you may need one of those. But the business license people can tell you if you need to have one of those. So the ability to set up a business quickly and easily is what the sole proprietor is about. However, the IRS sees you and your business as one entity, which means that you have to make sure that you're keeping your accounting and your bookkeeping all up to up, and that you're paying the IRS when they require you to pay. IRS will require you to pay 15.3% in self-employment tax. Now, self-employment tax, when you are working for an employer, they pay half, and then you pay the other half. But when you're working as a sole proprietor, you get the whole enchilada. So you must give them their money. Now, the IRS is a pay-as-you-go system. So what they say is, you make money, you pay us. Not at the end of the year. They want their money during the year when they could use it best as well. So they give you estimated quarterly taxes. Now, an accountant can help you figure those out for you, and a bookkeeper can help you figure them out. I will leave a link for a calculator down in the show notes that you can put in the numbers and figure it out. But you need to make sure that you are paying your quarterly taxes if you owe quarterly taxes. Now, because a solopreneur gets passed through income, it's taxed only once, but it's taxed on your personal account. So you have to attach a Schedule C to your 1040 form. But if you have a spouse, or if you have other income, say, retirement or investments, then you may be over the amount for that minimum 15.3 tax bracket. So please check to make sure that you're saving enough money on the side to pay these taxes, because if you don't pay at least 90% of your taxes, you can get fined. And these fines can be anywhere from $100 to $1,000. Plus, you don't really want the IRS to know your name or who you are. So stay away from being fined. So the advantages to a solopreneur is that there is a tax advantage in that it goes right through to your income. It's easy to set up. You have all the control. It's easy to dissolve if you decide you want to have a different kind of structure. You can do that as well. The disadvantages, however, is that you are 100% liable, meaning that if an insurance company says they want their $10,000 back and you don't have it, they could come after your personal assets. So they could come after your car or your home or your any of the property in your bank accounts. So make sure that when you decide to become a solopreneur, you're also having enough insurance that would cover some of those expenses. Because we're therapists, you also need to think about covering yourself for malpractice because, again, as a solopreneur, if they sue you, they can come after your house, your car, your boat, whatever. And you don't want that to happen. Most of the time, with a solopreneur, you don't have that happen because you're not incurring debt that you don't know about. So you know that you have to pay certain people certain amounts of money, and you don't have that pullback. But occasionally, especially if you use insurance, you may get a pullback where you think you're being paid and then you're not. So be careful with that piece, but giving yourself really good accounting and having the bookkeeper have all of that information for you and knowing when the quarterly taxes are due is really, really important. My other suggestion is to have a couple of bank accounts, one for taxes that you just put a little bit of money into every time you get paid, and the other two to be separate from your personal account. You don't want the IRS to have you commingling funds. You want them to know that this is a business, that you take it seriously, and you have your business accounts and you have your personal accounts separate. All right? Okay. Take care.